All right, three things in 3 minutes. So we have got to talk about insurance. Right now, the market is still extremely tight. We are not seeing insurance companies desperate to do business in California. Duh. Some of the high value carriers have even put temporary freezes on new policies, but are expecting to reopen in the next few weeks as the wildfire threat dissipates a bit. A few of the smaller standard market companies may be increasing their coverages, but where and when is still unclear. So we'll know a bit more in March. What we do know, premiums are going up. Insurance costs in the years ahead, due to these fires and other issues related to global warming, we're going to see increased cost of coverage, but that could lead to additional carriers moving back into California. What we do know is happening right now is underwriting is tougher than ever. Insurers are still willing to write policies, but they're asking more questions about roofs, electrical, plumbing, heating, essentially looking for reasons not to insure. Additionally, binding quotes is harder to get. So many insurance companies won't give firm quotes before offers are accepted. So buyers kind of have to be prepared to rely on some worst case estimates from an insurance agent. What does this mean for your clients? Crucial question. Make sure your buyers are working with an experienced insurance agent who knows the local market. These pros are not just quoting numbers. They're using real world experience to estimate coverage, cost, availability, etc. So make sure you're doing that and getting them prepped, because somebody coming in and trying to figure out whether or not a home is going to get coverage could be a disaster. Rates. I would not like to be Jerome Powell right now. His job is hard enough as it is, trying to balance monetary policy and create this soft landing, this mythical soft landing from an economy that is dealing with high inflation. But Trump's comments last week make his job even that much harder. Trump came out and demanded lower mortgage rates, or lower rates, I should say. And what does Jerome Powell do? The Fed is supposed to be independent. So does he capitulate and move into a rate lowering cycle even if the data isn't there? Does he hide behind the so-called independence of the Fed and keep his mouth shut? We probably know that won't stop the attacks. So what did he do this week? Well, this week when the Fed met, they decided to do nothing. They did not lower or raise rates. They punted. And Jerome Powell was unwilling to answer questions about Donald Trump. So what we have currently are mortgage rates that are right around 7% for a 30-year fixed. Data dependent. As inflation goes down or up, we will see what happens with rates. All right? Y'all got this.